Good morning, afternoon, and greetings from wherever you may be from around the world. I will be making the weekly outlook video for the week ahead, what I'm expecting going into the first week of May and the last week of April, as we have NFP on Friday. So as we do, we will begin with the dollar index, and I'll try and make this one shorter than the others because I found it was just more direct and straight to the point. So starting with the monthly chart, we see that even though my initial target was this sell side liquidity, we might tap into this inefficiency right here on the monthly perspective one more time before coming back down. I know there's a lot of schematics going on here on my chart, but it will make more sense sooner. So here we should also note the fact that we have this BPR, the BC on this side with the CB on this side. I'm paying careful attention to it because I would like to see how this monthly candle closes, which is going to be in the next few trading days. So depending on how this candle closes, we might have a continuation to the upside, clearing the buy side liquidity up there and an internal range liquidity up there. So I would like to see how this candle closes, and we will review what this candle closure looks like on when the month ends. So going down to the weekly perspective, we see that down here we had a rejection off of this bullish order block, the down close candle residing down there. We can see that price came down into it, which is coupled with a buy side imbalance, a BC, fair value gap right there, and rejected higher from there. So I'm looking for basically a continuation of the trend to the upside. We have a weekly buy side imbalance, sell side inefficiency residing over here. Let me remove this range for a moment. We have this residing over here. We also have this candle which acted as a shift in the state of delivery, a change of structure, if you want to call it that. The last bullish candle before the displacement to the downside. So I was looking for price to support within this whole area, which we can see when you measure the candle from the high to the low. The halfway point is this dotted line right there in the middle. We can see our price came down and tapped on it right there, perfectly in the middle. The second thing I wanted to note is the fact that when you measure the buy side imbalance, sell side inefficiency, which is this fair value gap, the space between this candlestick's high and that candlestick's low, you would also notice that, let's remove this for a second, you would also notice that price came to the consequent encroachment, which is the halfway point of this fair value gap. So these two indications, these two key points, or whatever you want to call it, tells me that price is likely to continue to the upside from here. But I do have one thing I wanted to add, which will be visible on a lower time frame. Let's set this as a target. So now that we have seen price reject from a weekly PDRA with time frame alignment, we would like to see a confirmation on the 4-hour chart. So we'd like to see a market structure shift happen on the 4-hour, and we can see that we got exactly that. We got a closure above a previous high. We can see the sweep of liquidity very clear down there, and then we got the market structure shift when the candle closed above that swing high. So now we would then expect price to come down into this fair value gap and continue higher. This would be what everyone would agree with right now. But the problem with this idea is that we got this rejection in a premium. For me to explain what I mean, we have to go back to the daily time frame. On the daily time frame, we can see the range that I was looking at last week, which is from that candlestick's high to this candlestick's low. We have a range drawn out, and I'm going to draw the range again. Let's put this in order. So when you draw this range, we would notice that the halfway point is this green line, which is right there. And the only PD array that I saw in the discount portion of this range is this fair value gap down here. This is the only fair value gap I see on a daily time frame, coupled with these series of down close candles. Makes me feel that this is a bullish, or this can act as a bullish order block with a fair value gap. So I wanted to see if price could trade lower into this area before continuing higher. I wanted to see something like this, and I don't know if we'll get that, but it will be the setup that I'm looking for. If we don't get that, then of course we will use the confirmation that we got from the 4-hour chart to continue higher. But personally, I would like to see price continue lower earlier on in the week. And when we shift over to euro dollar, we would be able to see exactly that as well. On euro dollar though, we did trade up into premium. We traded up into the 0.5, which is the 50% of this range from the high to the low premium, but we did not trade into this inefficiency from a daily time frame. The sell side imbalance, buy side inefficiency residing right there. We didn't trade up into it, so that makes me feel that we may also push up one more time before continuing lower. Because if we are truly bearish, I would like to see bullish PD array being disrespected, and down close candles should not be supporting higher prices. Right now it looks like down close candles are supporting higher prices, because over here we have this down close candle right here. If we measure the wick to the body, notice how it's coupled with this fair value gap right there. It's a small one, but it's there. Notice how we have that fair value gap in the form of a buy side imbalance. So right now it seems as if bullish prices are still in play, still an option for us to continue higher. So because of this trapped order flow, I would not be engaging until, say for example, we disrespect this BC. If we close below this BC from a daily perspective, then I could look for continuation to the downside. Otherwise, I am still expecting price to continue higher, because if we are going to stick to the time frame alignment, then we would see we've traded into premium. On a weekly perspective, we're rejecting away from this weekly fair value gap, so we would expect internal range liquidity to external range liquidity. As simple and straightforward as that. But I think because of the dollar index not tapping into discount, we are probably going to still continue higher and tap into a premium fair value gap. Let's actually go down even to an hourly chart. I would like to see if price can tap into that specific fair value gap here on the hourly time frame. So that's what I'm looking for. And when we here on the 1 hour chart, if we, going back to the daily time frame firstly, if we wanted to be bullish, we have now rejected from a high time frame PD array, which is the daily BC. We would like to see a 1 hour confirmation. On the 1 hour, we have now tapped into this 1 hour BC, but we haven't gotten a market structure shift. So in other words, if we close above this high on a 1 hour perspective, we can expect higher euro dollar from there. So when we get a closure, if we get a closure above this high and we create a BC somewhere here coupled with this down close candle, I would take that as a bullish order block with a fair value gap. That would be a unicorn setup for me to look for a retracement and continue taking it higher to that premium, to a deeper premium, of course, targeting this buy side liquidity first. So I would be looking for something like this earlier on in the week on euro dollar. But if we are going to continue lower, I already said what my validation point is, which is a closure below this inefficiency. If the euro dollar can close below this fair value gap from a daily perspective, then I could look for a continuation to the sell side liquidity down there. So that's my view on Euro USD. Let's move on to GBPUSD. Let's start with the weekly time frame. On a weekly chart, looking at how price is right now, we could almost instinctually say that we are bearish because we perfectly filled up this sell side imbalance, buy side inefficiency, which is a CB, a fair value gap in the form of a CB. So we could expect price to move from internal range liquidity to external range liquidity. I mean, the fact that we couldn't even close inside of the CB could suggest lower prices, and then probably going for these sell side liquidities residing at those lows there. And secondly, from the daily time frame, we did actually trade into the premium of the range. Let's delete the CB for now. If you measure the range from the high, from the swing high, the same swing high to the low, you would notice that we traded up into the 50% of the fair value gap right there on the on GBPUSD, and traded into this down close candle, which could act as some sort of order block, some sort of bearish order block to continue lower. But at the same time, looking at structure right now, we have SMT with the euro dollar at the low, because when you look at the euro from the 16th of April, you would notice that we created a higher high, a higher low. But when you do the same from the 16th of April, we created a lower low. So GBP swept the lows of the 16th of April, basically, at that point, while euro dollar failed to sweep the lows at that same point. So this SMT could suggest that we might be ready to climb higher. And when you look at the structure from GBP's perspective, it looks very bullish. It looks this is a very easy breaker to work with. So we're trading lower. We got this last up close candle that made us think we were bullish, and then did a liquidity sweep. Now the price returns to it, we can consider it a breaker. Well, that's personally how I look at a breaker. If you don't know what a breaker is or how to work with breakers, I'm probably gonna link a video up here on where I cover how to identify a breaker easily. So I would consider this to be a bullish breaker, and we are likely going to trade higher into a deeper premium. The first target, if we are bullish, would be this fair value gap, and then going through that, we might see this buy side liquidity tagged next. But personally, I would rather wait for the 7th of May for me to engage on GBP or any GBP crosses, but specifically GBPUSD. So right now, we just identified how the weekly looks bearish, but when we go down to the daily, it already looks bullish, and it's a very clean structure that suggests we might push higher. When we go down to lower time frames, we also see that bullish formation, with the fact that we could not even close below the swing low right there. So I personally, as I said with euro, I wanted to see a daily BC violated. I guess in this case with GBPUSD, I would like to see multiple closures below swing lows. So we have that swing low residing there. We also have this one residing here. If price can trade and close below this buy side imbalance, sell side inefficiency, then I may consider bearish price action. But right now, from the lower time frames, it looks more bullish than bearish. So again, the same thing that we just identified with the euro, we have a trapped order flow. High time frames supporting lower prices, lower time frames supporting higher prices, or the other way around. But basically, the time frame alignment that we would like to see is not visible. So I would rather say stay out from the dollar until it's clear. Again, looking at the monthly chart, we have a BPR here. The monthly candle should be closing in the next 2 days. So if we close without closing below this buy side imbalance, sell side inefficiency, it might suggest us climbing higher to clear this buy side liquidity. So the monthly closure will be very important for us to see where the pound might be heading to next. So yeah, right now I'm not supporting bearish price action, bearish prices, as much as I'm supporting bullish price action. So let's see how things play out before NFP, and of course going into NFP itself, which I might be live streaming, depends on how everything else turns out. So that's all I'm looking for on the dollar and euro. Nothing defined, and more of if then statements. The next that I would like to cover would be the indices. So starting with the NASDAQ. On the daily chart, I already mentioned how these lows are my target going into next week. Well, I mentioned that last week, and I wanted to see some sort of formation of a fair value gap that would take us lower, and of course we got that from the weekly chart. I think we actually created one. Yeah, we created a weekly fair value gap there. So I'm looking to see if this weekly fair value gap can take us down to the sell side liquidity, internal range liquidity to external range liquidity, and then continuing lower from there. The daily time frame, we see that price is now trading in the premium portion of this range, as we outlined in the previous weekly outlook video. So when we outline this range, we see that the 50% mark is right there. We have now traded into that fair value gap, and we are likely to trade into this premium fair value gap. So I'm looking and paying careful attention to this CB to see how price reacts from there, but I'm expecting lower prices from there, because as we trade into that CB from the daily time frame, we would be doing the same from the weekly. So if we tap into this, I would wait to see if we can get a 1 hour shift in structure to the downside, then a continuation to the downside from there. That's what I would like to see on the NASDAQ. Moving to the E-mini S&P 500, we will see somewhat of a similar situation. Of course, with the S&P being weaker than the NASDAQ right now. So when we measure the same range from the low to the high, we would see that we also tapped into the 50%, and we are currently inside of this CB. So if we are actually going to expand higher on E-mini S&P 500, I'll be paying attention to this other block yet again. I know we've traded into it before here, but there's a likelihood that we could just tap into it one more time, then continue lower. But of course, I'm supporting lower prices, and the same condition applies. I would like to see a market structure shift from an hourly or 4-hour chart or time frame. The reason I'm saying that we might tap into the other block is that if we compare the if we compared NASDAQ with ES, we will notice that the fair value gap that ES made was even smaller, so we can tap into this relatively quickly. So we might see price trade up into the opening price, not the opening price of this candle, and continue lower from there. So yeah, I'm bearish on the indices, at least for now, and we will see how next week unfolds. Let's see if Russell shows anything clearer, and that will be the end of it. Oh yeah, on Russell we have the exact same thing. We are likely to trade into this weekly fair value gap. Going from there, we might see a reversal from there, targeting the sell side liquidity there, the sell side liquidity there. Then we see how we continue lower from there. Right now, that's all I have. If you have any questions, if you have any suggestions, if you have any charts you would like me to pay attention to, please comment in the comment section below. If there's nothing else, then stay safe, good luck, and good trading.